Hello traders, and welcome to another candlestick analysis video. I know today I'm not putting my face in this video. That's because the frame rate was really dropping for me. I tried to make this video 3 times, but I kept having my movie player that records my face crashing. So after the third crash, I decided to just do it with just voice. So I apologize for that to start. Now let's begin on what are engulfing candlesticks and how they can help us in the market. So the reason I'm making this video is I believe that engulfing candlesticks are the single most important reversal candlestick out there. And when you see one of these after a strong sustained uptrend or downtrend, typically that means a reversal or a retracement is going to happen. So there are 3 rules that you want to keep in your head when looking at engulfing candlesticks. The first thing that you want to see is you need to see a loss in momentum and a loss in volume as price moves higher, if we're talking about bearish engulfing. So basically what that means is price has a much harder time moving higher. It takes a lot more time for it to go higher, and volume is falling as price is moving higher. And then what you want to see is an engulfing pattern. All that means is that price right here makes a lower low than the low before it and closes below that low. So price here closes below this low here, as you can see. There's a gap here, but just imagine that this was here because crypto doesn't really gap as much because the market's open 24/7. But this is Verizon. That's why it was showing the gap here. So price engulfs this candlestick here, as you can see. And typically this is when reversals and retracements begin. So just to recap, loss in bullish momentum going upward, loss in bullish volume, showing that demand for the asset is falling, and that price is having a trouble to accumulate, and then price begins a supply or distribution stage and goes much lower. Now let's look at some examples of what this looks like. This was a major reversal point for Ethereum a few weeks ago, and as we can see here, price is moving sideways on not so good volume. And then we have a very strong bearish shooting star. So you can see right here on fantastic volume. Price tries to move a bit higher, but fails on bad volume. And then we get a really nice bearish engulfing candlestick to the downside. Now, if you had seen this and known the rules of what engulfing candlesticks look like, you would know that this is very likely going to become the reversal or at least a retracement. Price is probably not going to rebound and go back up. The 3 reasons for that are A, volume. Volume's very weak here and very strong on this candlestick, much stronger than this. B is price hadn't retraced in a long time. As you can see here, price moved up and really didn't have any major retracement. So that would mean that this point is already very likely to retrace or reverse. And then also the breadth or the momentum of this candlestick. This candlestick's about, I would say, at least twice this trading range downward. So already just by mathematics, it's going to be a lot harder for this to go a lot higher because of how hard this fell. So this is when distribution began. A lot of supply came to the market. People want to dump their Ethereum. And dump they did, as you can see right here. And if you were a savvy candlestick trader, you would have seen this and said, all right, I really got to get out of the market. If you had gotten out here, you would have saved yourself a lot of money. So moving forward, we can see this pattern again. And I like this example because it shows my weakening bearish momentum upward and also low volume going downward. Price has a much harder time making a higher high here after this bear run. It's tiny volume here, really not so good volume here or here, and decent volume here, and really not that great. So as price moves slowly higher, volume moves down, then we get a very strong bearish engulfing candlestick of this pattern on great volume. Weak volume, strong volume. In this period, 4 hours, many more people were selling than in this period where people were buying. So price moves lower again, as you can see here. We can see this pattern again here. Just for one last bearish engulfing example, we can see that price here slowly moves higher, and on very bad volume here, we can see that there's a lot of people selling here, Not too many people buying here with good volume, and a lot of people selling here with a bearish engulfing pattern. And this is what sets the stage for another reversal / retracement. As you can see down here. So that's going to be it, just looking at bearish engulfing patterns. The three things that you want to know are you want to see either weakening bullish momentum. So price is having a lot harder time going higher, lots of high tails like this. Good example would be this one right here. You want to see weakening volume. So if you have a moving average, that moving average is going downward as price moves upward, showing some volume divergence. And then you want to see some really nice volume on the engulfing candlestick itself and some very high momentum. As you can see here, and especially you can see here, very high momentum. So just keep that in mind when you're looking at potential reversal or potential retracements. If price hasn't retraced or reversed in a while, you see a lot of bearish volume coming into the market, that's not a good sign. All right, let's move on to bullish engulfing candles. Bullish engulfing candles are the exact same as bearish, except just going the other direction. So what we see here is a downtrend, and then we have a candlestick that engulfs the candle before it, meaning that it makes a higher high and closes above the high of the previous candlestick. And again, typically you see these in a downtrend when the reversal happens. And then you have that close above the previous bearish candle, of course. You typically don't see a gap down, like I've mentioned. Gaps typically don't happen as often in the crypto market. So ignore number 3. And now let's look at some examples of bullish engulfing candles. So this one happened, I think, a few weeks ago as well. This was the Bitcoin reversal pattern. And if you had seen this and bought into this market, you would have made a killing. At least $2,000 if you had held it to today, off of a $2,000 rise in Bitcoin. What do we see here? Well, we see a very strong bullish candlestick here with fantastic volume that goes up 21.64%. Get that number from right here. That goes up 21.64%, fantastic volume, and we get these tails right here, which are nice. And this really sets the stage for a reversal. And price does reverse, as you can see here, and goes much higher. We can see some other engulfing patterns here. Fantastic volume here with about a triple of the average, as you can see. And some not so good bearish volume here, which sets the stage for an engulfing pattern. And here as well. This one shows actually weakening volume. You can see volume's going lower as price moves lower and tails to the downside, which is setting the stage for an engulfing pattern of these two. Another high volume bar right here. And this is really what you should be doing in the market, is to be looking at these kinds of patterns, engaging market strength based on these candlesticks and specifically based on their volume. You need to look at volume when looking at these candlesticks because they show you how much demand for the asset is available or how much supply for the asset is available. And supply and demand is what makes the market go higher and lower. And coming off that point, we can see the same thing here. Strong bullish volume, weakening bearish volume. Price moves higher, much higher here. And here is a continuation pattern, not really a reversal, but I want to throw this one in here because you see it a lot. This isn't really as much of an engulfing candle as more of just a strong continuation candle. It does engulf this trading range before it, meaning that it moves higher. It breaks out above the trading range of consolidation, and it continues this. But these are really important because these are very, very, very common, the bullish and bearish varieties of these, where these continuations after some consolidation, this really, I would say a very high probability of the time, these kinds of candles mean the market's going to move higher. And it moved much higher here, as you can see. Same with these two. Strong volume when price moves down, and then strong volume here, and then low tails. And these are all signs that the market will give you to tell you which direction is likely. The market, looking back, yeah, you can predict the market perfectly if you have 20/20 hindsight, but it's really a probability game. And what do I mean by that? What I mean is that when you're looking at these candlestick patterns, of course they're not going to work 100% of the time. Any trader or trading system that tells you something's going to work or is correct 100% of the time is probably fraud or just overconfidence. These work a high percentage of the time. And as a trader with good risk management and with proper stop losses and take profits, you can really become a profitable trader just trading off of volume, candlesticks, and just looking at market context to see where you are in the market. And engulfing candlesticks are a fantastic way to gauge market strength, really, to show you which direction price will go. And the strongest type of these engulfing candlesticks will happen after a long period of either an uptrend or a long period of a downtrend like this. And then you get this. So that's going to be it for this video. If you guys have any comments, concerns, or questions, leave them in the section below. I do apologize again about my frame rate that kept failing, and that's why I couldn't show my face in this video. I'm going to try to get that fixed. I'm actually producing on a Mac, which makes it a lot harder to produce videos. So yeah, that's going to be it. And let me know what you think of these engulfing patterns and any that you see in the market. Thanks for watching.